Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, another day, another higher high. So we have traded as high as 33.79 overnight. It's come back into 71. It had gone up a couple times in and around the Europe Open at 68, and it broke up over the top. It just goes back to what I've been saying for over a month now. Until the bears convert areas that matter on a closing basis and keep those areas converted on a multi-day basis, we will continue to go higher. Dips will continue to be bought, and we will continue to go higher, and it is what it is. You can think that it shouldn't, you can think any number of things, but the reality is, in a vacuum, this is a market that's bid for whatever reason and wants to go higher. So we talked yesterday about the 2 days worth of support at the daily mid-band, how this is a contract that wants to trade between the middle band and the upper band, and that makes it absolutely a buy dips market. So we're up now. If we end green today for looking 10 sessions in a row of green, that hasn't happened in a while. It feels like it probably should have happened pretty often, but they usually mix in a red day here and there. It's pretty unusual to do 10 in a row. Doesn't mean we're going to be red today. Doesn't mean we're going to be red tomorrow. Just means we've done 10 in a row. I think any reasonable discussion about the bears being involved in this market has to start with being able to close below the 9-day on a closing basis, and that's down at 33.17 right now. Hourly chart, you can see. They tried to knock it down yesterday morning. That dip was bought. They ripped it, then they held it, pulled back a little bit overnight. They weren't really involved with the hourly midband, and it simply held and it's continued to lift to the upside. Off the open, you've got a number of things that are distant from price. Volume weighted average price is sitting down below 65. You've got the proprietary moving average at 74. You got the 5-minute mid-band at 72. You got your hourly mid-band way down at 61. So it's coming a little bit from 79. I would expect it probably could come in. It could come in a little bit more. And if it does, it's going to be what is the reaction to that hourly mid-band and volume weighted average price, just for starters. So they pushed it down yesterday morning. The dip was bought, and it headed to the upside. So, but until the bears fulfill that simple task, convert any area that matters on a closing basis, keep it converted on a multi-day basis. Until that can happen, there is no sustainable downside discussion that's even worth having. You can be short, take your profits where you have them. So we did yesterday. We were short off the open. We covered, we ended up getting long, got long like 10 handles later than I wanted to, but, and then, we treaded water through the middle of the day, and then we ended up in a nice long to end the day. So, but, you can be short, just understand that it's a trade. And when price starts to turn, you have to make a decision about whether or not you want to fight price. Okay, everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.